Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hey everybody, looking at SPY on the daily and weekly time frame. So another day we reject from the 10-day moving average resistance. This is a similar pattern. We saw it on Thursday, a gap up open, rejecting from the 10-day, profit taking into the close. Not as significant profit taking today, but same pattern. So here's our low, our bounce high, higher low, lower high. I wouldn't be surprised to see a pullback down towards 213, back test this 100-day moving average support tomorrow, and see this range continue to tighten on the daily time frame. That 10-day moving average resistance is key. The bulls need to close above that level and turn that into support if they're going to see upside from here. So resistance is 214.31, 214.69, two of the recent highs that we've seen. Weekly time frame, the SPY here has the middle Bollinger Band as support right now, 213.40. But this is why I like looking at the cash level SPX, because we are rejecting right from that middle Bollinger Band on the back test. So SPY gets adjusted due to the dividends, and it's a little bit misleading, which is why I look at the SPX cash levels for this very reason. And it's because that very key level that was lost last week is now acting as resistance on the back test. And if we close below that level by the end of this week, we will still be looking bearish, as that key resistance level will reject the price. So looking at SPY on the 5-minute time frame to point out some trade opportunities today, we saw weakness right out of the gate with a rejection from the 100 period moving average resistance. I take that back. That's actually a trend line I drew, so there was no moving average resistance there at that point. But we pulled back very significantly, and even if you weren't in at the bottom, or even if you weren't in bearish from the get-go or bullish on the nice bullish recovery, and again, oil bottomed the exact same time, the low of the day, with SPY here at 1020, 1025. Then the bulls showed up in oil, and they showed up in SPY. So we rejected from this downtrend resistance line that I drew later. But my point is here, even if you didn't have a trade opportunity all morning in SPY, you come in at the end of the day, wherever, middle of the day, if you're working, there was a clear trade setup. Look at this 100 period moving average support, this blue line here. So as soon as we got back over it, we back tested it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times we held that level. A couple times we closed a few pennies below it, but then we quickly regained it. So that's 11 tests and holds of that moving average support. We see the range tightening into the end of the day, and we're certainly no stranger to seeing profit taking into the close of SPY. So if I see a moving average support hold 11 times, I know that if we lose that level at the end of the day, we're going to see profit taking follow. So we lost that level right here on this candlestick, and it closed at 213.85, or the low of that candlestick. Let's say we got in at the close of the candlestick right when we were sure that we were going to lose that 100 period support, 213.89. By the close, by the end of the day, we were down here at 213.67, 213.69. So again, you might be saying big whoop, 20-cent drop, but even now we have options that expire on Wednesday. If you were playing Wednesday options, which expire tomorrow, that 20-cent drop is giving you really nice gains to the downside, and it was a very clear bearish entry again. If a support holds 11 times, you know that once it is lost, lots of traders are going to recognize that, lots of algos are going to recognize that, and we're going to see a magnified move to the downside, which is exactly what we saw, and we're seeing some further profit taking after hours here with that weakness in SPY. So you don't have to be sitting at the computer trading all day. You don't have to be in on the high volatility first 30 minutes of the day. That's where the most risk and the most opportunity are for reward. But you can wait till things play out and wait till you get a very clear grasp on what is going on. And it occurred at 3:20 p.m., a nice little day trade to be had there, very clear to the downside. So just an example on the day trade here for the 5-minute chart. I appreciate you watching. We are looking for that daily chart to continue to tighten up, and we'll check back in tomorrow after the close. Have a great night.